You're listening to a production of the National Media Archive. To learn more or volunteer, go to nationalmediaarchive.com.
When you hear the words stock trading, do you picture the chaotic trading floor of the New York Stock Exchange, packed with people shouting orders? It's a classic image, but does it really capture what trading means today? According to FINRA, over 70% of retail trades are now executed online, reflecting how technology has transformed market access and changing who participates in trading. Take the story of Emily, a retail investor who began trading from her living room during the pandemic. She shifted from traditional buy-and-hold investing to day trading, drawn by the promise of quick gains and stories of viral meme stock profits. Some might argue, isn't buying and selling stocks always the same, no matter how often you do it? But here's the catch. While both trading and investing involve stocks, their approaches to time horizon and strategy set them apart, often determining long-term success or failure. So, as we move forward, keep this in mind. Understanding the distinction between trading and investing could fundamentally shape your financial outcomes and help you avoid common pitfalls. Why do some people trade stocks every day, while others buy and hold for decades? The answer lies in how they view time and information. Research shows that investors who hold stocks for over 10 years historically outperform short-term traders, with studies from Vanguard indicating long-term investors average higher annual returns. Consider John, who invested in a blue-chip company and held for 25 years, weathering many market dips. Meanwhile, his friend Lisa attempted to time short-term swings through swing trading, but ended up with lower overall returns and higher stress. Skeptics may insist, isn't it possible to profit from short-term volatility if you're quick and clever enough? While tempting, statistics reveal that frequent trading increases transaction costs and the risk of costly mistakes, especially for less experienced individuals. Here's the takeaway. Aligning your strategy with your goals and temperament, and understanding the trade-offs, is key, whether you're seeking the slow and steady path of investing or the adrenaline rush of trading. Ever wonder what's really behind those complicated charts and indicators traders use? Is it all just lines and numbers? Or is there a deeper method to the madness? Recent surveys show that over 80% of active traders rely primarily on technical analysis, using historical price data and patterns to guide their decisions, often with little regard for the underlying company. Take Alex, who spends hours each day monitoring candlestick patterns, RSI, and moving averages. He once caught a 3-day upswing in a tech stock after spotting a bullish flag, yet he couldn't explain what the company actually did. Critics might say, aren't you just gambling if you ignore a company's real value? True, trading on technicals alone can be risky, especially when market sentiment swings unpredictably or news breaks unexpectedly. But here's where traders find their edge. By staying agile and capitalizing on short-term momentum, they can sometimes profit from market inefficiencies, though this requires discipline, fast decision-making, and constant vigilance. Do tales of overnight trading fortunes make you wonder if you should jump in too? Before you act, let's look at the real odds behind trading success. Data from the North American Securities Administrators Association suggests that over 70% of amateur day traders lose money, and many professionals struggle to outperform the market after fees and commissions. Look at Harry, who started trading with high hopes after seeing social media ads promising fast riches. Despite months of effort, he found himself outpaced by institutional traders armed with advanced algorithms and vast resources, ultimately losing more than he gained. Someone might argue, but some people do make a living trading, right? Yes, but these are exceptions, not the rule, and for most, the risks, stress, and time commitment far outweigh the rewards. For the average person, focusing on long-term investing with a diversified portfolio and realistic expectations is more likely to deliver steady growth and fewer sleepless nights than the high-stakes world of trading.